Hi everybody, welcome to the Wyckoff weekly sessions. So as usual we start with the Hedera, similar to last week, and before getting into the details for people that are new to these sessions, these are the key areas that I'll focus on in these sessions, and they're based on two concepts. Also a disclaimer, as usual, this is for educational and research purpose only. Please take note of this. And let's begin. So there, this week a little bit different. If you have been to these sessions, I'll start with the Wyckoff first, the weekly chart. I think if this works well, I'll continue with this approach. So basically, on the right-hand side, this is where we are now. And we have just gone through 4 consecutive weeks. If the remaining 26 hours for the current weekly candle closes red, 4 consecutive weeks of red. The volume has been declining for almost 3 months now. So that's the current position. In terms of Wyckoff, there is a chance that we are going to see the sign of weakness stage being defined over here. What it means is there can be like 2 simple scenarios. Obviously, either go up or go down. But if, according to textbook, if a sign of weakness point is really, let me drag this over and so it's easier for everybody. So if a sign of weakness point is defined, then that means there is a likely chance that we'll see a bounce. However high, it depends on the demand. It can be lower than the purple line, the resistance line set by the automatic response, or it can go higher. So if we look at the last cycle, after the sign of weakness, it had an up thrust. So these 2 guys, the up thrust and up thrust after distribution, is not a must-have. So they may not appear in a distribution cycle. So the Wyckoff accumulation, the Wyckoff distribution cycle may happen without those 2. And what it means is after the sign of weakness, it can go straight to a last point of supply and then slowly go through its decline. So going back to where we are now, that's what I was trying to show you using what had happened in the 2001-2002 cycle. So if there's sufficient good news and demand, obviously we can see another round of up thrust and maybe even up thrust of the distribution. But then if there isn't much demand after this little rebound, the last point of supply, then it will eventually, the demand will eventually die down and the price may return to somewhere near the long-term playground zone. So this accumulation cycle previously, it's very long. So starting from here all the way, let's say to here, it was almost 3 years, close to 3 years, 917 days. So also from the last buying climax to the time where it returns to the white box, it was 427 days. We are still very early. Counting from the buying climax to where we're now, we're only 70 days in. So if there's no particular bad news and there's sufficient positive sentiment for people to continue with this buy and sell in the the distribution zone, then there will still be another 340 days of trading above or outside of this white box. Let's see whether that's the case. And going into the daily chart, basically this week, the whole week has been trading outside of the short-term playground zone, the pink box. So it's below the support line, or now the resistance line of the prices we have. So last week I've already mentioned at this range there isn't much support because there wasn't much overlapping trading activities when the price surged to this level. So it's a risky situation. The only thing we can take reference is these frequent trading activities in the last distribution cycle. So that's where it was around 20 cents. So at this point, there's not much direction. The volume is also low. Obviously, we have to see whether it successfully returns to a short-term playground zone. If not, it's a likely case that it will return to this particular range of prices that we are saying is around 18 cents to 13 cents. So that's the situation for Hedera. I'll switch to Sui Coin next. See you there.